This is the first price prediction video of 2023, and it is going to be a banger. We're going to have a lot of positioning from hedge funds in this first week of 2023, positioning for the rest of the year, which granted AMC closed at almost a 52-week low at the end of 2022. It should be more bullish positioning than bearish positioning because after all, the stock is so at its fundamental valuation or even under its fundamental valuation. You should see some bullish positioning on AMC this week. Now, we also have economic data that is going to be the main story of 2023, guys. So we're going to get into all of this information. We're going to go over the cost of borrow rates, the short interest, literally everything you guys need to know to start off the first week of 2023. So let's get into it, guys. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Also, if you guys want to take it a step further, come trade with me live in real time. Every time I make a trade, I post that in the community. Higher quality trades, trade less, but better trades. That's the whole goal of that, to really not shoot for every trade, but to try to hit the good ones. And as of recently, it's been pretty good. We're going to hope 2023 is as good as 2022 was as well. If you guys want to join that, link down below in the description of this video. Nonetheless, let's get straight into what you guys need to know. So first things first, we're going to start with the economic data because that's really the wild card here. Like I said, you're going to have a lot of positioning across the board from hedge funds, and they're so underweight technology. They're so underweight risk assets that I think just technology and risk assets are going to see more positive inflows than outflows. A lot of these funds, they're overweight on energy, they're overweight on healthcare, they're overweight on dividends, which is all fine and dandy, but stocks that can actually grow in a market that is not growing, right? If GDP is flat on the year or negative in recessionary territory, those companies like Tesla that are growing 40% revenue year after year, or AMC that's even growing exponentially since the COVID crash, those are companies that should see more asset allocation, more hedge funds and more money managers and more institutional investors should be looking at those kind of companies, in which I do think AMC fits that bill as kind of this reopening trade, right? People want to talk about cruise lines and airlines still in the sense of this reopening trade from COVID. Even think about COVID in China, AMC, you know, a player globally, could still have a role to play in that reopening trade. Nonetheless, let's talk about the economic data because that's going to really be the thing that could derail a lot. And you don't have anything for today or Monday, right? We'll just call it for what it is. Monday, tomorrow, you're really not going to have much. You do have a 3-month bill auction and a 6-month bill auction. These are bond auctions for to put it in a better terminology for you. Now on Wednesday, you have ISM manufacturing PMI, the producer side of inflation, coming out at 11 o'clock in the morning. That will be important, but JOLTS job openings will be the most important thing up until Wednesday. And the forecast is for 10.1 million job openings. The last reading that we got was 10.33 million job openings. So you're expecting about 202,000 jobs to basically not be there anymore, right? Think about if 200 and some thousand businesses had, you know, help wanted signs outside. They wanted to hire one employee. Well, they're going to take those signs away, right? So they're job openings that were open that are no longer open. You're going to get JOLTS job quits as well for November. I don't think that's going to be as important. And then you're going to get the FOMC minutes on Wednesday as well. This could give us further indication of where the Fed wants to take interest rates and really why they decided to do what they did at the last meeting and go with that 50 basis point rate hike. You're going to get the actual transcript readout of that meeting. Now, I do think the jobs data is going to be key here. And like I indicated in the beginning of this video, I think it's going to be a bullish thing because you're past Christmas, you're past peak hiring phases. So I think the estimates are still pretty high. relatively speaking, for the job openings number. I think they're relatively high for the actual employment report that we are expecting to get. So nonetheless, continuing on Thursday, I just went. No, I didn't go over Thursday. Thursday, you are going to get the balance of trade for November. You're going to get initial jobless claims, exports, imports, continuing jobless claims, and Fed Bostic that speaks at 10:20 a.m. So all of this employment data is going to be super important to the markets, because that's the last thing that needs to happen, is the labor market to actually cool down. And I do think it's going to cool down quite rapidly. I don't necessarily expect a lot of people broad-based to instantly start losing their jobs, but I do expect the job openings number, to really fall off a cliff in a big way, especially since you're past Christmas, and that is the peak hiring phase, right? If you didn't hire somebody you needed for Christmas, you probably don't need them now. You probably just got through with less people in the holiday season. Hopefully that makes some sense to you guys. Now on Friday, you got the non-farm payrolls for December. Probably going to be one of the most important things this week, because this is the actual addition of additional jobs that have been filled, and this number might be quite high because this is for December. This is for the holiday season. We are expecting 220,000 additional people that did find jobs in December. The previous month was 263,000. So depending on, if we're under or over 220,000 jobs, that's going to really dictate how our Friday is going to trade. Nonetheless, I do think the employment data, like I said previously in this video, is going to be softer than expected, should be a bullish thing for the markets, and it should help propel a lot of your risk on kind of companies. Now, let's go ahead and take a look at AMC in the Ortex data. If we take a look at the live short interest, that is sitting at 21.5%, almost sitting at 111 million shares that are sold short. Last numbers that we got for the cost to borrow average was sitting at about 274%, cost to borrow max at 305%, and the cost to borrow minimum at about 7.26%. Last readings we got from Interactive Brokers, actually getting one here today, which is interesting. The cost of borrow rate is at about 97%. So the rates are super high heading into the new year. And that is another pretty good reason for shorts to want to buy some AMC to offset some of the risk of their short positions, considering their cost of borrow rates are jumping up exponentially just over the past week or two. So I do think that is something else that you could look at and say, hey, does it even make sense to short AMC at these levels, considering, the stock's at $3 and some change. I think it's barely above $4 right now, and the cost of borrow rates are 100 to 300%, right? It just doesn't, to a certain extent, make sense to be short AMC. I don't think it makes sense at all, but there's always going to be a bull and a bear case for anything in the markets, right? So we try to acknowledge that here in these videos. Now, for the option activity last week, 213 orders totaling $117.43 million, positive order value of 6%. It has not been a very bullish last week as far as option activity, and you've seen some very big option orders coming through that just really make it hard for the stock to rally, right? But it didn't necessarily push us down over the last couple of days either. We hit that 52-week low on December 28th. That was on Wednesday. Thursday, the stock rallied 8%. On Friday, the stock was down 1.69%. So you're pretty firmly off of that 52-week low, that low in 2022 that was set at $3.81. And it looks like you are in a bottoming process for AMC stock, and usually you want to be a buyer during this bottoming process. And you guys can even see this latest technical indicator that we did get, which was bullish, and this is a relative strength index, the RSI. It's basically flagging it as a very unusually bullish move because we were severely oversold on the RSI, way under 30 at about 25, and just with this Thursday where you gained 8%, the RSI shot right back up to more normal levels. Still oversold, but more normal levels around 31. So that was an indication of a lot of people getting into a bullish position on AMC stock, guys. Now, also, I do want to take a look at the days to cover as well, because the volume has been so low that the days to cover is steadily increasing. Now you're at 6.67 days to cover. That means if all shorts wanted to get out of their short positions, it would take about 6.67 days to do so with the volume that we are seeing. Obviously, if volume goes up, days to cover likely to go down, but nonetheless, that is very high in the historical sense of 2021 and 2022. The short squeezes that we've seen, days to cover did not ever get close to 6. Even back here when AMC squeezed the last couple of times, days to cover was around 2 or 3, not 6, right? That's double where we were at before. So it can put a lot of pressure on hedge funds that want to get out of their short positions, because there's simply just not enough buying or selling activity to do so in a rapid fashion, right? If you wanted to get rid of 1 million shares that you had shorted, if you wanted to buy 1 million shares, just not a lot of people willing to sell a lot of shares for you to buy. So that's where you get high days cover, and that's how the price of AMC could go exponentially higher due to the days to cover being so high. Now, we take a look at the option activity for this upcoming Friday. You have about 9,000 calls that are currently in the money and about 44,000 calls that are out of the money. If you look at the puts, about 12,000 puts that are in the money and about 23,000 puts that are out of the money. So considering these numbers here, it could go either way, but I do think there's more dry powder on the sidelines. On the call side, considering the difference between 9,000 and 43,000, and considering the difference between 12,000 and 23,000, there's a higher ratio of calls that are out of the money compared to in the money, guys. So there is all of that information. Not really looking at a huge gamma squeeze potential. We'll see how positioning is though, because with positioning you can get a lot of option activity that can move the needle in a very big way for AMC. So I do think that's important to point out. It's not my base case for this huge gamma squeeze because a bunch of positioning, right? I do think at the very least it's going to be bid support and will keep us off of that 52-week low, kind of no matter what happens in the markets, unless we get a really big red day. Now, as far as earnings, guys, you don't really have anything. You have Walgreens Boots Alliance on Thursday and Conagra Brands. That's really going to be the only two that the markets even care about. Walgreens obviously going to be one the markets care about even more. Conagra is important for its own reasons, right? It's a food company, so to see what they're telling us could be important, but by and large, you're not going to have companies that are going to move the market. So that is a positive thing, because once you start to get earnings coming out, the economic data is going to be a sideline there. We're going to want to see where these companies' earnings are, and we're not expecting to get good earnings. So the fact that we don't have earnings this week is a bullish thing for AMC. So there's that information. Let's dive into the charts here just briefly. And like I said, guys, it looks like you're in a bottoming formation, especially as the RSI did snap back so aggressively on Thursday. That looks to be a very bullish sign. And I do think if you do get a lot of that reopening positioning, if you do get a lot of positioning from hedge funds and institutions into kind of recovery trades or just stocks that are beaten down, AMC could easily see a move to, that $5 level, that $5.50 level. That would be a moderate bounce for AMC. And just as of recently, don't forget, guys, you cannot forget this, that November 10th and November 11th, you rallied 18% both of those days. So you can and likely will see very explosive moves in AMC stock very, very shortly. Now, that's obviously not my base case, right? I can't just go out on a limb and say we're going to see 20% days back to back, but it's definitely a possibility. Now, my actual base case here is if economic data comes out soft, right? The employment data comes out soft, and the markets can really get some momentum off of that. I do think my base case scenario is around 550. That would be a $1.50 move to the upside. Let's take a look at the percentage gain that would be. Let's go ahead and pull it up. Around 550. That's about this line right here. That would be about a 33% gain on the week, which would be very good. I think the best case scenario would be a move to about 650, and that would be about a 60% move. But I think you would really need to see some overall risk on nature in the market. So that's why that's not my base case, even though that's probably going to be the main level of resistance. You know, it's not my base case because it's hard to forecast these things, especially when you don't have the economic data, when you don't know how positioning exactly is going to play out. Now, once you get to 550, this is a very important level because this was a previous level of support many times for the stock. And once you really held support here on December 16th, you broke this and you fell quite aggressively. You rebounded to test this, and you did not break out above this. You fell the next day on December 20th. You retested this and you failed it again. So I do think 550 around this line right here, maybe it's like 530, is going to be very important. If you can break out above that, then I would target that 50-day moving average. But this first level is going to be right here. I'm trying to figure out exactly where it is. It's not quite 550. It's about 535, roughly in that range. And you guys can actually pull up this line. Very easy to see, just a spot, just quick technical resistance and support levels. This one sticks out like a sore thumb, baby. So there is that information. Like I said, volume has been lower, so watch for that volume to head back into the stock. And let's go ahead and pull up the MACD for you guys just very quick as well, because that's another good one we like to watch. And severely in oversold bearish territory. And usually when the stock is this oversold, you know, you tend to make money buying it at these oversold levels. If you've bought AMC at its 52-week low throughout, you know, all of 2022, it's worked up until now. So as long as you didn't buy it, you know, in November at the highs, you have made money with that strategy, right? You bought, just check it out for just shits and giggles, right? You bought AMC at its 52-week low back here in, what was this? February of 2022, just hitting lows. You bought that, you were instantly rewarded, right? If you didn't even take profits right there, cool. You bought it at its 52-week low again, and you were massively rewarded. A move from about $7 per share all the way up to about $20 per share, right? You held it, whatever. Hit another 52-week low. Bought it at the 52-week low, massively rewarded about 2.5 months later, right? Stock at about $17, you bought it at about $6. And same thing even back here, just in early November. Bought it at the 52-week low, and you made about 100%, give or take, depending on what time you ended up selling out. But you get the pattern here. Every time you've bought at the 52-week low, you have been rewarded. Not to say that is going to happen again, but statistically, it's probably a higher probability that you will rather than you won't, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel if you have not already. Thank you guys for watching. Leave your comments, questions, or concerns down below in the comment section. Most importantly, make 2023 a good one and enjoy the rest of your day. I will see you in the next one.